how many presentations I've done to our clients on this, but we're coming to the stage now where decisions have to be made. There's going to be four parts that I want to talk about today. I want to look about security. In other words, the security that the insurers might require, why they would want to. We're going to look at, obviously, these individual bank accounts, premium accounts that is requested in the regulations, the possibility of exemptions and how you would go about an exemption, and of course, is there going to be another extension? We've just seen an extension. So these are all interlinked. So I'm not going to do them one by one. I'm just going to kind of speak about them. And if I haven't answered or haven't given enough explanation, just ask the question. But you're actually free to just interrupt at any time and ask a question, as though I was standing in front in our training room. Exactly the same process should take place. But let's just, before I really start, let's just look at some background to this. And this premium collection, and I'm going to call it a dilemma, began more than 5 years ago. And it started we were all surprised to see it in what they called the FSB, as it was at the time, the Retail Distribution Review. And in that Retail Distribution Review, or the RDR as we always called it, there was a section in there where their proposal was that under no circumstances should any insurer allow any intermediary to collect premium on their behalf. And the reason that they were saying this is that, having done a number of site visits to insurance companies, the credit control was absolutely appalling, and there was millions outstanding. And so they did some further investigations, and they found that there was a lot of abuse. So what they did in this RDR, they said, fine, we don't want any insurer to allow an intermediary to collect premium. We will accept that there are professional collection agents that they might use. And of course, that was before IOM. So even now, they're kind of looking at it on the basis that even premium collection agents might not be appropriate. But that was the RDR. But if we look further, if we take the Short-Term Insurance Act, and I'm only talking short-term insurance today, if we take the Short-Term Insurance Act, in the Act itself, there's an actual section in the Act, it's Section 45, which speaks about premium collection and that intermediaries are allowed to collect premium on behalf of an insurer. And then there are regulations attached to that. You know, the Act just says what can be done. The regulations say how it should be done. So Regulation 4 of the Short-Term Insurance Act provided all the rules that were applied. Now, as you all know, the insurance industry is being transformed. They're all moving on to the new Insurance Act. And that transition is a bit slower than what the authorities wanted it to be, but nonetheless, it's going ahead. And it's interesting that in the new Insurance Act, there is no such clause. In other words, it's not an added clause allowing any premium collection by an intermediary whatsoever. It doesn't prohibit it, but it doesn't include it, which means that it will probably be allowed in certain circumstances, but there will be considerable standards or conditions attached to that. So it's understandable that at this point in time, the authorities are moving gradually toward what they believe is control over an exposure that they see as systemic. So on with that, in September last year, September 2018, a lot of the regulations attached to the Short-Term Insurance Act were changed. Now, in September 2018, I don't know if you can see this, here is 9 full pages of changes to the regulations. And out of these 9 full pages, 3 full pages related to premium collection and the conditions attached to premium collection. Now, these are conditions which are applying to the insurance companies, not to the intermediaries, although there are some references to intermediaries in there. But largely speaking, they are conditions that say, Mr. Insurer, if you wish to give authority to collect premium to somebody, these are the conditions that you have to comply with. And as I say, there are 3 4 pages. Now, they were very careful here, and it's the first time I've seen this. It's probably not the first time it's been done, but it was the first time that I've seen this, which is where in the regulation changes themselves, they allowed for an exemption to be applied for. And I'll read this to you. The actual exemption reads this way. The authority may, on reasonable grounds, on application from an insurer, exempt an insurer or its independent intermediary from any requirement of this part if the authority is satisfied that the granting of the exemption is necessary because practicalities impede the strict application of a specific provision of this part. So there were 3 pages of those conditions, and they were asking for insurance companies to apply for an exemption where necessary or where they thought it was necessary. Now, as far as I'm aware, no exemptions in the motor sector were ever lodged. If they were, they must have been declined because I haven't seen the approvals, and exemptions we do see. They are public knowledge. So we know that no exemptions are applied to the motor sector. So we expect, or suspect, should I say, that no exemptions were applied for. So, armed with that, over the course of the last year, we have been saying to all our clients, look, these conditions are quite onerous. And one particular condition there, which is the one that relates specifically to having a separate premium account, is so onerous on some of our clients that an exemption should be applied for, that it wasn't done. Now, the other interesting thing is that of these 9 pages, 3 full pages of conditions were postponed until enacted from the 1st of July 2019. And those 3 full pages of conditions related, of course, to premium collection. So that was extended to the 1st of July 2019. That 1st of July 2019 was subsequently extended again to midnight on the 27th, 28th of September 2019. Now, an interesting part is that of those 3 pages of conditions, only one very small part of it was extended until the 1st of February. The other 3 pages relating to premium collection was not extended. I'll show this to you. You'll see that, let me just find these 3 pages. And the 3 pages start here, and have a look, and there's pages of them, you'll see, but have a look at this. I don't know if you can see this. I've circled that one little part here, which I'll read, was the one that was extended until the 1st of February. And that merely says, a separate bank account referred to in sub-regulation 2 may only contain monies collected from policyholders and may not contain any monies or funds of the independent intermediary. All these other conditions are now in effect from the 28th of September, which is 3 weeks ago. Now, most of those conditions relate to what should be in the premium collection agreement that has been issued or granted by the insurer. So as at now, every one of you that is collecting insurance premium should actually have a new contract effective from the 28th of September, which clearly identifies what you can and can't do. And it's interesting that one of those, just one of those sections, actually states, and I'll read it to you, I think it's here. Here we are. That written authorization, which must be in place now, a written authorization must specify the purposes for which premiums of the insurer received or held by the independent intermediary may and may not be utilized for by the independent intermediary. So obviously they're saying, yes, you've got to collect it into a separate bank account, but these are the conditions. This is where you can invest it, or this is what you can use it for, and it must be in the agreement. Now that agreement is in place or should be in place now. If that is not in place now, the insurer is actually in breach of the law. But let's now move on to the real issues. The separate bank accounts. The regulation states that you can have one or more bank accounts. Now, the reason that there's one or more is because there's two ways of going about having a separate bank account. First, let me just say, when we talk about a separate bank account, we are talking about a premium account, not a trust account. There's a proposal by the authorities that a trust account is on the cards, but right now it's a premium account. Now, there's two ways of going about this. The very first is to have a premium account, one premium account, where all premium, irrespective of the number of insurers that you make yourself, goes into that one account, and it has to be obviously reconciled. Now, if it's your bank account, the downside is that the insurer will want some kind of security, and we'll be talking about that shortly as to what that's going to consist of or what it may consist of. The other way of doing it is by having a bank account in the name of the insurer for which you have transactional authority, which is standard practice in the premium collection arena. The downside of that is that if you're using 2 or 3 insurers, you'll have to have 2 or 3 bank accounts. Now, the plus side of that, of course, is that there will be no security required. Either way, and I say we'll be talking security now, but either way, it means that you have to have a separate bank account out of which no other monies can go in there, belonging to the dealership, the company, or whatever it might be. Only policyholder premium. Out of that, you can deduct, obviously, commissions and any other fees or expenses that you can earn from an outsourced agreement or a binder, but under no circumstances are you allowed to use it for any other reason. Now, the only way that well, there's 2 ways that you can escape this premium collection or this separate bank account. One is by getting an exemption, and the other one is if there is a further extension. Now, let's talk about the extension first. The extension that we've now got to the 1st of February was kind of given as a handout, and it was given purely because the industry just wasn't ready. And when we talk about the industry not being ready, we're not talking about the motor industry. We're talking about the insurance industry. The insurance companies weren't ready. They were quite convinced that there was going to be some kind of extension, as they seem to do, as we all seem to do. So we have to say to ourselves, will there be another one? I don't think so. I think that what we've got now is what we have. If we get an extension, it might be for a week or 2 weeks. It's not going to be an extension where, to coin that phrase, if Brexit, carry on kicking the can down the road. It's not going to happen. So the only way that you can escape having a separate bank account right now is by getting some form of exemption. So let's talk about how you go about this. There are 2 types of exemptions in this kind of scenario. The very first type is an industry exemption, i.e. not an insurance industry, a motor industry exemption, i.e. the application goes in by a number of insurers who are operating in the motor sector. They go in jointly and probably under the auspices of the South African Insurance Association to apply for a motor industry exemption. I think the chances of that happening is remote. And the reason I say this is because the motor industry has already proved to the regulator that they are quite happy to use split invoicing. There's a whole stack of motor dealers out there that are already doing split invoicing using an outside agent to do this. Dibella is obviously probably the largest of them, but there are others, I believe. So the motor industry as a whole is unlikely to get any form of exemption as a whole. It does not mean that an insurer can approach the regulator for an exemption for a specific client or a number of clients. Now, the way to go about an exemption in this case is actually very, very simple. There's no forms or anything like that to fill in. It is just a letter that is requested by the regulator to motivate why an exemption is necessary. Now, if we look at what's happening today in this insurance market, we know that if you can convince the regulator that it's in the interest of the client, then there's a good chance of getting such an exemption. Now, when I say in the interest of the client, I mean, let's look at the practicality, the inconveniencing of the client. So there'll be three areas that you would have to address in a motivation. One is the practicality, the ease of action of the client, and the way that the client is inconvenienced or not inconvenienced by doing it this way. Second one would be in terms of what is the risk for the client, and there is none. And so that must be an emphasis within this motivation. And third one is, what is the risk to the insurer? How do you mitigate or eliminate the risk to the insurer? So if those three can be included in the motivation and justification there, I see no reason why the Financial Services Board could not provide an exemption. However, what is very clear in the regulation is that an exemption can only be applied for by an insurer. The insurer will ask for, if they wish to do this, depends on their relationship with you or what they want to do at the end of the day. But they're the ones that would have to make the application, and it would be for a particular client or a particular, in this case, dealership. So that is how the exemption would be applied. I do not believe that you're going to escape this. I think that it's inevitable. You're either going to get an exemption, or you're going to have to capitulate and have separate bank accounts. Now, we've been talking about bank accounts, and I've said that there's going to be some security, and there's got to be some security. The way the insurer is going to apply it, you've got to look at it from the insurer's perspective. There is no doubt, and we've seen from IOM and in previous cases, that there is definitely a risk to the insurer by passing on the authority to collect premium by an intermediary. So what they would have to do if they authorize you, and in fact, in part of these 3 pages of conditions that I've mentioned, you'll see that a big chunk of this is how is the risk to the insurer going to be mitigated or eliminated in the event of non-payment or non-passing over of premium. So an insurer, if it wishes to mitigate the risk, it's got to do one of 2 things. It either has to increase its capital base, i.e. in terms of the SAM regulations, the solvency regulations, which is awkward to do because it means that there's got to be more stress testing, there's got to get involved with fund managers, you've got to get involved with actuaries and so on. So it's a difficult way to do it, but it can be done. The second part, the second way they mitigate it is by saying we want some kind of surety, because we need something so that we can say to the regulator and our risk committee that we're mitigating the risk by having some kind of collateral security. Now that collateral security, it's often a guarantee, a bank guarantee or something, but it doesn't have to be. It can be some form of other collateral security. It could be share certificates, it could be property ownership. It could be a whole lot of things that doesn't have to change hands. It just sits as a kind of under a agreed accession in the possession of the insurer. So anything can happen. So the insurers are going to have to risk rate each of their clients, that is each of the dealerships that is collecting premium, to risk rate them to the extent that they say, we either want this collateral, we want that collateral. So in all probability, you'll be given 3 or 4 different options by the insurer. And there'll be some insurers that say, no, there's no option. If you want to collect premium, these are the rules, and this is what you're going to have to do. So you really do have to sit and talk to your insurer. The insurer's got to make this call. I think that that largely clears up what I wanted to say. The conclusion is very simple. You're either going to have to, in my opinion, you're either going to have a separate bank account or apply for an exemption. And if you're going to apply, either way, you're going to have to talk to your insurer. Fortunately, there's usually only one, because it's usually just warranties where this applies. Or I suppose you could change the rules, make your warranties monthly or something, just to eliminate this problem. But you have to sit down with your team and say, what are we going to do here? Maybe set up an urgent meeting with your insurer to say, listen, what are our options here? Can we get an exemption? Are you prepared to apply for an exemption for us? And if not, what are the arrangements? What security do you want if we collect the premium? If we don't collect the premium and it goes into a bank account which is administered by us but in your name, what are the conditions attached to this? And so on and so forth. A lot of it, however, should already be in that new contract that you're supposed to have in your possession from the 28th of September. I don't know whether they've actually been done or not. So that kind of concludes what I want to say this morning. Short but not sweet, I suppose. And so far, I haven't had any questions. I mean, I don't even know if you're out there. but I'm going to assume that you are. So okay. I just say, are there any questions?
Pete, we've got a question from Andre. Andre, you can talk.
Hi, Pete. I've got 2 questions.
Yeah, go. Yeah.
How the hell do I get your biscuits if I'm sitting in my own office?
You have to bring your own biscuits. That's why we're doing this. We can't afford biscuits. Our rates are too low.
Damn it. Pete, in terms of the FSP, where does the liability sit where if there is a breach? So it's a short-term insurance act requirement, but now as an FSP, if Guardrisk or your other insurers don't get the exemption or get their house in order, do we just stop doing business with them until they do, or what is the obligation on the FSP?
Okay, the obligation on when you say the FSP, you remember both the insurer and the intermediary are both FSPs. The responsibility is clearly on the insurer. And in fact, in those 3 pages of conditions, Andre, it is very clear that the insurer has to have a monitoring system in place to ensure that the intermediary that is collecting premium is in fact adhering to all the conditions of the authority that is given to them by the insurer. So that's all the insurer's responsibility. Everything revolves around the insurer. So it's the insurer that goes to jail, not the dealership.
Any other questions? You've scared them. You are not allowed to speak ever again, Pete.
Right.
Candice, you wanted to ask something.
Okay, how do I put this? Okay, so I've got the separate bank account. I've been doing this for probably, I don't know, 2 years or so now. We've been doing this. So we collect premium on behalf of our dealership through our insurance broker. Recently, ABSA approval started declining with our warranties. When we try to put it on a separate invoice, they actually don't want to release the contract. And I've been fighting with them saying that, you know, in terms of legislation, we need to split the invoice. And they are asking us to put it on the main invoice, the warranties and stuff. And that's the only way we get paid. So I'm scared that we are not doing things right, but in fact, it's ABSA that's forcing us, or else we can't get our contracts and get paid. So what do I do about that?
Well, Candice, you know, we can't change the regulation, but I do believe that is one hell of a good motivation to get an exemption, isn't it? You know, the ABSA, you know, the bank will not adhere to your requirement. they will not allow you to collect separate premiums. So that would be a fantastic part of your application if the insurer is prepared. Who is your insurer?
Hold on, let me just unmute you. Don't speak, Candice. Let me unmute you. There we go. Speak.
Who is your insurer, Candice?
It's
Is it?
Guardrisk.
Guardrisk. Well, yeah, that's an interesting one because Guardrisk, you must approach Guardrisk to say, look, I'm dealing with ABSA. Here is evidence that ABSA will not allow a split premium process. I have to collect the whole lot. I need an exemption. And that, I can't think of a better motivation than that. That, coupled with the other stuff, is surely sufficient. You've got to have to chat to Guardrisk on that one, Candice. You're going to have to talk to Guardrisk.
Any other questions?
Okay.
Sorry, Candice, did you still want to speak?
No, thanks. That's fine.
Okay, dokes. Anybody else that has a question? And Jaco has a question. Let me just... Right, Jaco, hold on. Jaco, just press the space bar and speak.
Right, can you hear me?
Yes.
Candice, I just want to answer you. I'm not too sure why they don't, ABSA doesn't want to allow you to do split
All of a
invoicing.
sudden, it's all of a sudden, all the years they used to, it's of late, like the past 3 months or so, they can't even tell me why they're doing that. We're trying to figure out if it's system related or what. So I'm still now in that argument.
Because we've been doing split invoicing for 2 years as well, and I mean we through all the banks, and we haven't had any of these issues. So I'm just not too sure if you. I'm sure you're speaking to the right people, but there must be something specific then why they're not doing it. But certainly we don't have a problem with ABSA doing the split invoicing payment.
Thanks, Jaco.
Can I ask, does anybody else have a problem with ABSA on split payments? Mind you, you probably don't know because most of you are collecting premium yourselves, so it doesn't really matter. But if there is, you know, maybe we can share some ideas here. But certainly on the basis of what Candice has said, that's a terrific motivation.
Pete, we've got, sorry, Tony's got a question. Tony, can you hear us? Can you speak?
Yes, I can. I just want to agree with Jaco. We've been running split invoicing since 2015, and we've never had any problems. What the banks, the banks generally do is they allocate a code to the individual dealer environment and then a product code to the specific product. And when it pulls through on the invoice, they recognize who it is and in fact pay it without any problems at all. We have a standalone account that we run through our FSP and have done since 2015. So we've had no issues at all. Thanks.
Thanks.
Candice,
It could be system related. So that's something I'm trying to figure out, you know, if it's system related, relating to maybe how the dealer versus the bank is loading on Signio or something like that. But yeah, I am working on it, but I'm just happy to hear that the others don't have a problem. So then I have, you know, more information to go back to ABSA.
Okay. Thanks, Candice. Peter de Kock has got a question. Just hold on, Pete. Let me just, unmute you. No, just unmute you. Oh, my goodness, I am fantastic. I'm going to become a webinar runner for the rest of my life. Peter, just, Mr. de Kock, just press your space bar for me and then, so now you can speak. You can speak.
Pete, can you share, or can anybody share, what are the costs involved with the split invoicing from the bank point of view and from Debella or wherever you guys use?
I'm probably not the right person to answer this, and I'm sure that others are. But I'm led to believe that the banks will charge between 30 and 50 Rand, and over and above that, somebody like Debella will charge either between 100 and 150 Rand. So I'm led to believe that you're looking at a cost of approximately 150 Rand per entry. So it's quite pricey if you're selling a lot of cars. But somebody else can probably correct that. But that's what I've been led to believe.
I've got Tony that might help. Tony, You can.
Peter, we run the Ceriti split invoice system, so obviously it's built into the program, and then we pay the banks 30 Rand per transaction, which we just effectively take out of our commissions, and that's the cost to us, 30 Rand per transaction.
Okay, so Tony, yeah, so you're saying people that use Ceriti will get that split invoicing concept free. They've just got to pay the bank. Is that, are you sure that is free in the Ceriti system, or is it just built into the cost and there was a loading for that or something? Do you know the difference? Is there a difference?
I'm not sure, Pete, but I know that we just pay, you know, the Ceriti cost. I don't recall that they went up in 2015 because it was some small development work at the time, and then obviously it's just set up now so that it operates. But even if it is a few Rand, I mean, the reality is it's not costing us a huge amount of extra money. You know, you just increase your premium by the 30 Rand and the client's effectively paying for it.
Okay. Jen, is there anybody?
We've got Ceriti guys on the panel, so maybe let's ask one of the Ceriti girls. I mean, which one of you want to put up your hand to field this fantastic question? Oh my goodness, Ceriti is silent. Let's see.
Okay.
Jeanette,
Yes, Jackie.
can you hear me?
Yes, I can.
Sorry, yes, I can confirm that as part of your system and services cost on the Ceriti system, split invoicing doesn't come at an additional cost and is included there. So yeah, and quite correctly what Tony is saying, then you just have the cost from the bank side, but there's no system cost attached to it.
All right. We've also got Michelle Sali from Ceriti that can give us a little bit more inside info from Ceriti themselves. Just hold on, Michelle. I just want to unmute you. If I can do that, it would be lovely. Dozai. Michelle, you can speak.
Can you hear me?
Yes.
Hi, Jeanette. Yes, Jackie's correct. There is no additional cost for the split invoice on Ceriti.
All right. That's fantastic. Thank you very much. Then we've got Yaku that also wants to say something. Yaku, you're welcome to speak now. Just hold on. Okay.
Spacebar. I use that spacebar. Okay. Now I just Tony, I think, answered the question. So the only cost that is involved is what between what Pete and Tony said. So it's really a bank fee that they charge for each separate invoice or split invoice that you do for the web.
Thank you. And then I've got Tony that raised his hand. Tony, you're welcome to speak now.
No, I think I pushed the wrong button. Sorry. I just wanted to say that, you know, the Ceriti process has worked exceptionally well for us over the last 4 years. We've never had any issues at all with that split invoice program. Once you've negotiated with the banks, you get your product, your user codes and your product codes set up. It's in fact works like a dream. With MFC, obviously what you have to do is every time you change a product, add a product or reprice a product, you've got to get them to change on their side the actual costing so that in fact the product code identifies that the premium is now changed. That's a bit of a pain, but it's, you know, once you've got a relationship with the people, it's easy to do.
Thank you. I've got France. Just hold on, France. Let me just unmute you. Oh, you know, does I? France?
Okay, can you hear me?
Yeah, the floor's yours, sir.
Okay, good morning, everybody. Pete, basically two questions from my side. The one is you made reference to Debella, and I know perhaps consultancy is on the same page insofar the split invoice solutions go, and don't get me wrong, they're a big part of our lives, given that we are dealing in a small independent space more often than not. However, I'm not, and the question is really, is what on the paper, is it going to be or have an impact on their business model? Because at this stage, effectively, they are acting as a collection agent. You know, to that extent, where the requirement is really, you know, you're all out in your own account or alternatively directly to the insurer. With them in between and, you know, money's being deposited into one of their trust accounts with IOM. Are we not on the same page there? That's the one question. And another question was, or is around, the permutations. One of our clients, they have over 60 dealerships, each having their own transactional bank accounts. They also deal with not only their own product under a cell captive, but also other service or product providers' products. So is it in a question of each branch times each service provider, so many bank accounts to be open at that level?
Okay. All right, let's deal with your first question first. I don't know about VAP's consultancy, but if they're working on a similar concept to Debella, the reality is that they're not collecting premium at all. What they do is they provide the system or the platform to allow that split invoicing. The money is actually collected by a collection agent on their behalf. And I believe it might be Fulcrum now, but it used to be IOM. I just know that they changed from IOM when that IOM debacle emerged. So I know that Debella is not a premium collection agent. I do not know about VAP's consultancy, but I suspect that it's very, very similar. So the collection agency is the one that would need the approval from the insurers. The second question is, do you have to have a bank account, a premium collection bank account for each dealership? And the answer is no. You only need the one premium account. Now, as I say, I've got to look at it from two different angles. One is that whether that particular company with 60 dealerships is collecting in its own name, or whether it's collecting in the name of the insurer and putting it into an insurer's bank account. If it's in their own bank account, they only need one account. It's just a question of somebody's going to have to reconcile it between 60 different dealerships. Because what the bank will do is they will put money into the dealership for the metal under that dealer code, and they will put money into that one bank account, which could be anywhere. Subject to it being in South Africa, of course, that one bank account, which then has to be reconciled by somebody to give the returns to the insurers. If it's an insurer bank account, the insurer will have to decide how many bank accounts it wants, but I very much doubt if they would want 60 bank accounts. I suspect that they would just want the one anyway. But again, it's a question of dealing with the insurers. So just to recap, if you're collecting the premium, if the dealer is collecting the premium as a collection agent, then it will go into one bank account, irrespective of how many insurers are involved. It just has to be reconciled and paid over. If they're collecting the money in the name of an insurer, there will need to be one bank account for each insurer. So there might be 2 or 3, depending on which insurers are being used. Franz, does that answer your question?
Sorry, I muted him. Let me just go back to Franz. Franz, does that answer your question?
Yeah, thanks, Peter. I think in general, I was just concerned that, there's this requirement to have a bank account per insurer per dealership scenario, which would just be madness. I mean, as it is, it would be absolute madness. And, the cost associated as it stands for appointing 16 accountants to now reconcile something that was done at a different level, it's just mind-boggling. But as you said, that should form part of a presentation then to the FSCA, to relief. No doubt, because it is madness. I mean, we have lived through split invoice structures before, and just to bring all the the money's being dished out all over the show and bring it in all together again to make sure that ultimately everything ties up to that single premium is really mind-boggling and in my mind really madness. We've made something very simple, very complicated.
Yeah, but as I say, Franz, perhaps what is developing now between our chat is all of the stuff that would be good justification for an exemption. But again, that's up to the insurer to decide.
Pete, we've got another question from Marius. Marius, you're welcome to speak. So 'n bietjie static daar, ons kan nie mooi hoor nie. Maurits sê daar's jy breek verskriklik op, jy klink. Dis glad nie hoor wat jy sê nie.
Perhaps, Marius, you sound like you're underwater swimming. Is there any way that you can send an email or something on this, on your question? Because we just can't hear a word you're saying.
Ja, dis jammer. Sorry about that. Are there any other questions that you would like to ask? Nothing? Okay, so this session is recorded. We will upload it on our CPD portal, and you're welcome to go and listen to it again. And as always, if tomorrow morning you have a couple of questions that you do want to ask about this, you're welcome to just pick up the phone and give us a call. Sorry, before we end off, Mr. Rudy again wants to ask a little question. There you go, Andre.
Thank you. Pete, we know that Guardrisk has been in discussions with the FSCA, and they were quite keen to get you on board to represent all of your clients in the process. I know that you buggered off on vacation instead, but now that you're back, what is happening on that front?
Right, I'm not sure what's happening on that front, and I'm not sure what happened while I was away. I have not been able to speak to Cobus since then, but we have had meetings with the with Guardrisk, not on that particular subject, but just in terms of the general auditing processes. And I raised that question, and but obviously it wasn't Cobus; it was one of his senior staff members. And the response that I got was that at this point in time, there is no, as far as she was concerned, there has been no move to actually approach the FSCA for some form of exemption. And that was actually the meeting that I had, which stemmed, or which was the foundation for the purpose of today's discussion. Because I thought, well, if they're not going to move, then nobody is. Whether they will or not, I don't know. I don't want to put words into their mouth. But based on what I heard, I just got the feeling that they were just going to carry on in terms of the current law and offer a number of different options as security for different clients based on the risk profiles of those clients. So that's all I can say. I think I will put a call through to Cobus to ask if this is going on. Also, I know Jeanette was involved in my absence as well with this. Jen, maybe I can ask you here. Did anything transpire from Guardrisk on this issue while I was away?
Well, no. What happened is I sent an email to Cobus just to find out exactly what's going on with the premium collection, and he responded and said, please, will you and Pete be able to come with us to the authority and just represent us? And it wouldn't only be for the motor industry, it would be for other retail industries like cell phone companies and furniture stores and all these guys that has some kind of warranty attached to the product. And I basically responded and said, just you set it up, we'll change our diaries and we're ready when you are. And the silence has been deafening. I have tried to phone him a couple of times, but I suspect he's running around a bit with this problem at the moment. So unfortunately, I don't have anything positive or constructive to say or to add to this, sadly. I see France has another question. So hold on, France. Okay, France, go for it.
Yeah, no, sorry about this. It's more just a comment. Yes, I was quite closely involved the last few weeks with this whole issue and, getting direction from Guardrisk. There's the letter that was issued to certain clients, confirming status quo. But in the same breath, Cobus did confirm that they will engage with the likes of myself and other people in the industry to be part of a proposal to the FSCA on this whole thing. So that's the intention. Cobus himself, I know, was on leave, so he's probably back shortly, and then that will probably get momentum. But yeah, just from my side, that a little bit of feedback or input.
Oh, that's nice. Thanks, France.
Can I just say thanks for that, Franz? Thanks for that. In fact, we would love to work with Guardrisk and others to try to get some intelligence to what we've got to do. We do understand and have to understand that, which is what I tried to do when I gave the background, that the regulator is very, very unhappy with the concept of an outsider collecting premium. They believe that the core function of an insurer is to issue insurance or give insurance cover and collect premium for it. And that the general rule is you do not outsource a core function. So you know, we understand their feeling on it, and it's probably going to be like trying to negotiate Brexit. But I am very happy to go with them. But I do think, and maybe there is some hope of an exemption of some form. But I still believe that everyone should be sitting back saying, right, if all else fails, how long do I need to set up bank accounts? How will it work? Who do I need to speak to? In other words, put an action plan together, put a time frame to it, so that if there hasn't been any change by a certain date, then you just carry on and put this action plan into place. I mean, if it needs a month, for instance, which is the month of, say, January, you might say something like, if I haven't heard about an extension or an exemption or anything by the 31st of December, my action plan for January is to put this split premium concept in place, which suits us as a company, and just deal with it that way. So that's really all I can say. I know how the FSB feel about it. I have seen these regulations, and my own feeling is that an exemption will be granted, but it's going to have to be very, very well justified. Okay, and I think that's all I can say on it.
Any other questions? Going once, going twice? Ladies and gentlemen, thank you very much for joining our first webinar. I don't think it went too bad for rookies. So thank you very much, Pete, for all the information and the update. You guys must have a lovely, lovely day. And as I said, this webinar will be, or has been recorded, will be on our CPD portal within the next couple of days. Good luck, and you've got our numbers. If you're struggling, you're welcome to phone us at any time. Cheers.
Okay, thanks, guys. You have a great day. Thanks a lot.